Markets are going through a torrid time at the moment if you want to look at equities or fixed income, and it's all to do with the Fed. It's all to do with tightening. It's all to do with protectionism, as we heard earlier from your colleagues, and the impact that's having on global growth. So you've got equities selling off. You've got treasuries, which 6-8 weeks ago were at 320. People earlier this year were talking about 3.5, 3 3/4 by the end of the year, and here we are back at 280 this morning.
And of course, you've been saying, that everyone's looking to see what the Fed does in 2019.
Everybody's looking to see what the Fed does to 2019. Effectively, 25 basis points is priced into the futures market, 75% for this evening. But as we've heard, it's about what the Fed says. It's how they communicate. It's whether this is a dovish hike or whether this is a still data-dependent hike. And I think we'll probably end up with the latter rather than this dovish hike that everyone's talking about. The Fed has always been very consistent in terms of being data-dependent, but on a preset trend towards normalising the balance sheet. So I think at the end of the day, you're going to get something towards, a more data-dependent Fed this afternoon, which may, or this evening for us, which may disappoint somewhat.
Simon, it's Nancy here in Singapore. I mean, I'm curious in your thoughts, not so much what you think the Fed will do today and into next year, but what should they do? Because there is a bit of a debate going on as to what the fundamentals actually look like, both in the economic data front and for the corporate front as well.
Well, it depends whether you're looking at the macro data, Nancy, or whether you're listening to Mr. Trump, because obviously he has his very particular ideas about what the Fed should or rather shouldn't do. But as we heard earlier, if you look at the underlying US economy, it's still very strong with an unemployment rate at 3.7, down at a 50-year low. So the Fed really is in a decent position to continue to grind tighter, but it has to be very cognizant of the broader global concerns. More importantly, perhaps Mr. Trump's effects through tariffs on global growth, and be reactive to that. All I would say is the fact that the Fed has raised 8 times, potentially 9 times this time tomorrow since the end of 2015. So 200-odd basis points back in the chamber, ready to redeploy should it need to. And I think that, again, gives it that flexibility going forward to remain data dependent and able to move as it needs.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.